So now I'll pass it off to Haley, who will get us started with our goal for the day.
Thank you. Thank you, Monica. Okay, so our goal for today is that you leave here knowing how to organize your financial records, identify key tax deductions, and we also want you to take actionable steps to file your taxes accurately and on time. So, we're going to give you a quick glimpse at the agenda right before we dive in. So we are going to cover a few items. So one, we're going to cover how to understand tax deadlines and forms. We're also going to go into organizing our financial records and keeping more of your earnings. Yes, please. That is overall the best thing. And we're also going to leave you with some tips to prepare for next tax season as well. So we want to kick this off. I want to hear a little bit from you guys. I want to know exactly, do you know when taxes are due? So hop in the chat and let us know when taxes are due. If it's your first time filing, do you know when taxes are due? And I'm just going to hop on here and see a few responses coming through. Okay, I see. Okay. Okay. Good. Good. Okay, I see you guys. I see you. Okay. So if you said April 15, that is right. That is the deadline. Unless you are an S corp, then your deadline is a little bit sooner. So do we have any S corps in here? Let me know if you're filing as an S corp. And that deadline would be March 17 this year, just because March 15 is on a Sunday. So when it lands on a weekend or a holiday, it's, put it over to the next day. So S Corp. Okay. I see a few S Corps on here. Okay. Yes. Yes, this is USA. Yes, correct. So, all right. So there are some benefits to filing as an S corp. So if you are, just because I already mentioned that, if you are interested in that, stick around. We're going to talk a little bit more about that later on in the presentation. So definitely stay tuned for that. So these are some really big dates that we have here. So you'll see on your screen, there's a little bit of a timeline. So we're going to go through each one. So January 31st, that was the deadline to receive a 1099 or a W-2. So that was just a few days ago. And then the very next deadline is March 17. That one is all about S Corps. So that is your deadline to file as an S Corp, or your deadline to file an extension if you are an S Corp, to give you a little bit more time. It gives you about 6 months to actually file as an S Corp. So right after that, we're going to go into April 15. That is the deadline for you to file your taxes as a sole proprietor, an LLC that has not elected to be treated as an S Corp, and personal tax returns. So that was the one that most of you kind of chatted in the chats, because that's the most known one. So that is your deadline for that. And if you file an extension, that is the deadline that you have to actually file one for those that are not an S Corp. So if you are an S Corp and you filed an extension back on March 17, the next deadline for you will be September 15. So that is your deadline. That gives you that 6 months to file as an S Corp because you filed an extension. And if you filed an extension on April 15 as a sole proprietor LLC, or even for your personal tax return, then you have until October 15. So that is that very last deadline that you see on the timeline. So, okay. Pulse check. Everybody with me? I know I just threw a whole bunch of dates at you, so I just want to make sure we're good. Everyone's good. And if there's more questions about S Corp or difference between S Corp and LLC and things like that, we're going to cover a little bit more towards the end of the presentation. So don't worry about that. We hear you. We see you. This is just for the deadlines specifically. Okay, good. I'm getting some yeses and I'm getting some hearts. Awesome. Okay. Cool. Yes, you could screenshot. You're also going to get a replay. So you're going to get, the presentation, and it'll have all your slides on there as well. Okay. So now that we talked about important dates, we're going to go into some filing, everything that you need to get to actually file your taxes. Now, the very first thing I'm going to say is this is not an exhausting list. So we're going to go one by one. But know that depending on your financial and tax situation, you may have other documents that are not listed here, but overall, this is like the overall guideline for things that mostly everyone needs. So we're going to go one by one so you could follow along with me, and also you'll get the replay. Social Securities for yourself, your spouse, dependents. So that's something you definitely have to bring with you. You also need to bring in your business EIN or TIN. So essentially, an EIN is your Social Security for your business. So if you applied for one, then you will have one, and then you'll bring it to do your taxes. Next, if you made any quarterly estimated tax payments during 2024 for 2024 tax year, you'll want to bring those in with you. So receipts or amounts, of the quarterly estimated tax payments that you made. And then that way, when you go to file your taxes, they're able to put in those amounts to offset the amount of tax due. And we're going to go a little deeper into quarterly estimated tax payments also later on in the presentation. So if you have questions, drop them in the chat, but know that we are also going to cover it a little bit deeper. The next thing that you may want to bring in is education or child and dependent care tax credit. So these documents, this applies for like if you have a child or a dependent, or if you are going to school as well, like university or something like that, where you're paying for education. Those would be credits that you would be eligible for potentially. And so if you are going to claim those, then you will gather those documents from your school or your from like a daycare provider or a child care provider. I know I usually ask for those myself because I'm a mom and I have a son. So I usually go into the daycare at the end of the year and I'm like, all right, I just want to have a record so I can, claim this tax deduction. This tax credit, and they'll know exactly what they mean. And it's pretty much just a statement of every payment that you've made throughout the year. So you may or may not qualify for that, but either way, it's there for you. Next is contributions to a retirement account. So this you may qualify for if you are, contributing to a specific tax advantage retirement account. And you can actually pull those forms from the platform itself. So I know like I use a retirement account provider and I go on there and I download my tax forms at the end of the year, same deadline as the January 31st deadline. So you could take those. And pretty much what that'll help you do is be able to deduct that if it's a tax advantage credit for retirement amount. So that's for you there. Next, this one's pretty common, so everyone kind of knows this one. W-2s or 1099s or any type of other forms of income. So if you have W-2s, you'll receive those from your employer if you are working a 9 to 5 or your spouse is working a 9 to 5. That's basically where you will get those. And then a 1099, that's where you receive for freelance work, contract work. You'll also receive a 1099 form, not necessarily a 1099 NEC form, but a different one for like interest or dividends. So here's something that I like to do just personally. I like to list out, even in my personal, the things that I'm like, all right, what bank has given me like any type of interest, right? So if interest has been given to me, you know how there's like interest yielding bank accounts and things like that. If I meet the threshold, more than likely there will be a form, like a tax form on their portal for me so that I can claim all of that, so that I can pay taxes because it becomes tax payable for interest that you collected, interest that was paid to you, and dividends as well. And then if there is anything that I was charged interest, so now I'm talking things like a home loan, I'm talking things like a line of credit, a credit card, things like that, and where you paid interest, you may be able to have a form also on the portal, and then those may count as tax deductions. So those actually lower your tax amount due. So one you pay taxes on, and one is actually a credit for you. So rule of thumb, just check everywhere. I literally make a list and check everywhere possible. So that lets you know. And then the very last one financial reports and records. So I know that I saw a little bit of questions here in the chat about expenses and things like that. So right here, this is where you would have reports of income and also expenses tracked throughout the year. So you may have like a profit and loss report from an accounting software, or a spreadsheet, or any other type of written record. So, okay, I'm seeing here a few questions. So we'll answer those also in the Q&A. All right. So we've talked a little bit about 1099s. Let's go a little deeper into 1099s. So the first one that you're probably familiar with, I would just say not comfortable, but familiar with, it's a 1099 NEC. And so this form, you will get one from HoneyBook specifically if you collected over $600 in HoneyBook referral payments, or template market earnings. So that is a form that you'll see on your portal if that is something that applies to you. You could also get a 1099 NEC from other entities or other, companies or things like that if you did independent work for them outside of the HoneyBook platform and it was $600 or more. And then the other one that you will also receive is a 1099 K, which is a form where this is the form that actually other platforms, so not just HoneyBook, but Stripe, PayPal, things like that, they will give you one if you transacted $5,000 or more. So now this is a thing with 1099s. I know the deadline has passed, but I just want to clarify it because I know it's a lot on here. For the 1099K, this is when you pay someone through the platform, right? So let's say that you paid someone through the platform and you did not pay them via check or, cash or wire or ACH or anything like that. HoneyBook will be the one issuing them the 1099. If you paid them outside of HoneyBook, or if you paid them via those forms that I mentioned, like cash, check, ACH, wire, things like that, you will be responsible for issuing a 1099. Now, the 1099 deadline has already passed, but this is just for you to know. And I wanted to be able to make that distinction between these two forms as well. So now I'm going to take a breather and ask you guys a few questions because I know I've, again, tossed a lot of information your way. Drop in the chat if you received more than one 1099K this year. How many did you guys get? I want to know. And you probably will receive one, like I said, from any place that you transacted $5,000 or more. So maybe not just HoneyBook, maybe other platforms as well. Okay, so let me see. 6, 4. Okay. I see. 3. Okay. Yeah. So, yep, you may receive one from HoneyBook and then anywhere else where you transacted as well. And then I see one. I only got the one from HoneyBook. Okay. Got it. So that is good to know. So because we did see a few from HoneyBook as well, let's dive deeper into the 1099K form that you will receive from HoneyBook. So right here, we have our form. This is the form 1099K. This is the one that we were just talking about for transacting $5,000 or more through the platform. So this form right here is going to include gross income. So very important, gross income does not include refunds or fees charged. So it's gross is the total amount, before any refunds, before any fees that were charged. So you have to account for those refunds and fees charged separately because they may reduce your taxable income. So don't worry, I'm getting to you. Don't worry. I know you're already wondering, okay, how do I do this? Don't worry, I got you. So gross income shown on your 1099K also does not include anything paid outside of the HoneyBook platform. So that means anything that was paid outside, maybe you invoiced separately outside of HoneyBook, or you was paid separately to you outside of HoneyBook. But also maybe you invoiced through HoneyBook and then you marked it as paid manually because the payment was received outside. So I see this a lot with clients that pay via cash, or they pay via check. So you go and you deposit the check, but obviously it was not paid through HoneyBook. So you mark it as paid. That will not be included in your 1099 form. So that's important for you to know. And again, income that was received elsewhere will not be included. So it's important for you to be able to have all of those forms, not only the one from HoneyBook, but also separate if you have other payment processors that you're using. Like I saw some people say 5 forms, 6 forms, 4 forms, that's exactly what I'm talking about. So, okay, I'm excited because I'm going to tell you guys something new. Okay, so you can also pull now a payments process detail and payment process summary from your HoneyBook Tax Hub. More on this later, but this is just for you guys to know that now instead of just getting the form, you're also going to be able to have reports that can go and act as a backup to those forms. So you will have the payments process detail report. Let's say that on your form, you see that on January you processed $10,000, right? And you want to know what made up those 10,000, you'll go ahead and pull a payments process detail, and that will give you exactly the transactions that added up to those $10,000 that you see being reported in January. So it's really great. HoneyBook is really taking away the manual aspect by just giving you a report and saying, here's exactly what made up, that figure that you're seeing on your 1099K. So I know I'm teasing about the HoneyBook Tax Hub, but we'll get there. Okay. So next, we're going to talk about what happens when you don't get a 1099. Because I think I saw a few things here and there on the comments, and I want to be able to also tell you guys about that because it's common. Sometimes you don't get a 1099. So I want to be able to help you guys out with that. So if you did not receive one or a W-2, first let's go into the W-2. So if you did not receive a W-2 from an employer, what I want you to do is you could reach out to them, right? So directly, you could reach out to your W-2, your direct supervisor, whatever the case may be. And if that doesn't work, you could also go directly to the payment processor. So maybe the payroll processor is ADP or Gusto or Rippling, something like that. You could go to them and they'll sometimes are able to provide you with a digital copy, and that works just fine. So if the employer is not able to help you or they don't have it, or they route you to the payroll processor, that's an option for you. If you did contract work, right, and you did not get a 1099, so again, try reaching out to the person, right, that you did work for. And if that doesn't work, or they say, I don't have a 1099 for you, whatever the case may be, then try to ask them at the very least, do you have like a statement of payments made to me throughout the year? And then you could take that and then kind of have that be a workaround for you around not receiving a 1099. And again, you will receive different 1099s from different companies if you meet the threshold. So that's an option. Now, if it all fails, right? Let's say that they're like, no, we don't have a 1099 form for you. And no, we don't have a statement of, records, or they give you something and you're like, this doesn't really look like everything you paid me throughout the year. It's too low or it's too high or whatever the case may be. Then you could go ahead and check your bank statements. So for deposits received. Now, know that those amounts will be net because it's what was received in the bank. So to couple that with your invoices and find those gross amounts. So you got your bank statements and you got your gross amounts from your invoices, and then try to like piece it together. Now, this is my caveat, and this is like, I got to put on my accountant hat for a second, and I got to say, please, try not to rely on receiving 1099s. Try to keep track of your own financial records, because even though there is a deadline in place, even though we know that we have to provide them, even though we have to file them with the IRS, like all of these things are in place. Oftentimes we hear, I did not get one, I did not receive one, and it's like, what am I going to do? Right? So keep track of your own financial records, especially for payments received, for everything, but in this case for payments received, so that you're not dependent on, somebody else's mercy of sending you a 1099 at the end of the year. So that's just my 2 cents there. Or even better, if you use HoneyBook to transact all of your client payments, you could just hop onto the tax hub and pull a report, and then you'll have all of the payments that were processed, and you don't have to go and hunt anybody or ask anybody, for anything. So that is actually something that I advise my clients. A lot of time we have things everywhere, and I really feel that that is exactly the reason why sometimes taxes feel so overwhelming. It's because throughout the year, we have things everywhere. Like there's this payment processor, and then I do it from here and I do it that way. And then at the end of the year, you realize through very, very, very long nights right before filing your taxes that you're gathering all of this data and you're missing this and you don't remember what that was, and 1,000 things. And so I always tell my clients, let's just streamline. Let's just use one software. We are going to receive all payments through here. This is going to be our one thing. It makes it so much easier for me, and it makes it so much easier for them. And it gives them control to know at any point of time, not just tax time, where their financials are, and how they're looking. So little tidbit, that's just one thing that I absolutely just I tell all my clients, please, 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 let's streamline this. So, okay. Taking off. I'm not gonna sit here and just like, So, okay. Question for you guys. How excited are you to learn about the HoneyBook's new tax hub? Now that I've mentioned it a few times and I've teased about it and I've talked about this and that and whatever, give me some emojis, give me some comments in the chat. Let me know. I know my energy is high, but I'm just really, really excited. This is me, by the way. This is me like on a high about all things financials. So, okay. I'm seeing some hearts. I'm seeing excitement. Yeah. Okay, cool. Okay. It's here, guys. It's here. HoneyBook's new tax hub. Okay, I'm ready. Woo. Okay, cool. Okay, we're going to go into what it is. We're going to go exactly where you will find there. And most importantly, how it can help you streamline your taxes. Okay, that's probably the most important thing. Okay. So HoneyBook's Tax Hub. This is our centralized place where you'll find an array of reports to not only gather information at tax time. I want to make that clear, but it also gives you a deeper look into your finances. So you can pull reports at any given time, right? And these do come in handy during tax time. I think I've made that pretty clear throughout the other slides too. But you can also, kind of use these, especially this one right there, to pull all the information that you need if you did not receive a 1099, even from HoneyBook. Let's say that you did not meet the threshold of the 5,000 plus transactions or whatever. You can pull this report, and that can help you to be able to figure out your amounts, because not everyone will meet that threshold. And if you don't, then there may not be a 1099 for you. And that's just not just HoneyBook. That's just overall. That is the threshold the IRS has, has speculated. And so that is what we have to follow. So if you did not meet it, there may not be one for you, but this is a great backup. You may have your payments completed report where you'll find all of the information for projects paid, gratuity, discounts, refunds, everything, fees charged, absolutely everything. And then you can just use that, especially if you transacted everything through HoneyBook. You don't got to go and find anything anywhere. Yeah, nowhere. So, okay. But we have more. There is more. Okay. There is discounts report. Now, this one's new. I know that we are familiar with the payments completed. We've actually overhauled the whole thing, so it's a lot easier on the eye and it's a lot easier to understand, but it's still the same report that we're all, used to and comfortable with. But now we have discounts report. So if you want to just see the discounts that you've offered throughout the year, this is a report that you're going to pull. And that's important because discounts lower your gross revenue. So there's how much you charge, and then you if for a discount, and then that lowers your gross revenue. And then there's a refunds report as well. So this one will again show you all the refunds that you issued throughout the year, which again lower your gross revenue and may lower your taxable income as well. And I know I saw this in the chat somewhere. So if this was you asking, this one's for you. The fees charged report. This one is, I think, one of the most requested ones. So the fees charged report, you can see all of your HoneyBook payments related fees on there, from payment processing, instant deposit, capital origination fees, if you have a HoneyBook capital and things like that. And it's just a simplified view of just fees charged because they are a possible tax deductible, transaction. Tax deductible expense, aka a tax write-off. So we definitely want to see those on there, separate from everything else. And I'm seeing a question, something our accountant will be able to see. So if you have your HoneyBook, if you have a HoneyBook bookkeeper and they have a HoneyBook bookkeeper access, then they will be able to see your reports. However, if not, like let's say that it's an external accountant, and I see Monica just replied, yes, perfect, exactly what I was going to say. You can download it and then give them to them right away. So all you have to do is literally press of a button, download, here you go. So super, super easy for you. Okay. Going back to fees charged and how they are a tax write-off, let's talk about keeping more of your earnings. So, AKA tax deductions, tax write-offs, tax credits, all the good things, because we are obviously wanting to keep more of our earnings. That's just, that's why we work so hard. We want to keep more of it, not give it away. So, okay. This little chart right here will really kind of help you guys to really understand, but don't worry, I am going to break it up for you. Okay. Let's say that you have your taxable income on one side. So that's what you see all the way to the left. And then you have deductions. So tax deductions reduce your taxable income. An example of this is meals with clients. So let's say that you have a client and you go to meet with them and you have a meal with them. Very important when you are doing this, just so that if you're ever audited or anything like that, it's very important that you keep records. So maybe keeping, your calendar where you had that meeting with that client. If you're taking notes, I know I just told this to one of my clients recently. If you're taking notes, make sure that you write out, meeting with so and so this date, and here's everything we talked about, and just kind of like file it away. They could be digital, you don't have to go paper or anything like that if that's not your thing. And this way, if you're ever audited as to, was this really a meals with clients, deduction that you took, you can always have that backup. Yes, here's my calendar, we were on, meeting for this date, this is where we went, this is the meetings, the notes that we took. And then it's not, it's not anything that anybody could really question you on. You have all of your written record. So that's my one thing with that. So that would be a tax deduction or write-off. So usually think of these as tax expenses, as business expenses, that are tax deductible. So you have your taxable income, right? You take away all of your tax deductions. So all of those expenses that are allowed to be written off. And now you have a reduced taxable income. Now, taxes are calculated now on that amount. And then if you have any tax credits that you're eligible for, then you'll be able to go ahead and claim those. So now the really big thing with credits is they lower your tax bill dollar for dollar. So that's important to know. And something else that's important to know is that some tax credits are refundable and others are not. So what that means is that if there is a tax credit that is refundable, that could reduce your tax amount owed all the way down to the point where you could even get a refund. And then if it's not refundable, then that will lower your taxes all the way down to zero, but it will not issue you a refund. So it will not exceed your zero amount owed. Here's an example. Let's say that you owe $500, right? That's your tax amount due, and you get $1,000 credit. If the credit is non-refundable, you will just your owings will go down to zero, but you will not have a $500 refund. If the credit is refundable, then you will have a $500 refund because it offsets the $500 that you owe and gives you $500 on top of that because it was a $1,000 credit. So those are some differences there. Now, I got questions for you guys because I know I dropped a lot of things on here and I said so many things. Ooh, okay, I didn't know that was going to happen. I guess we got fireworks. Okay. Drop in the chat some tax deductions and tax credits that you used or that you have used in the past that you're familiar with. Are any of the new tax credits or deductions that you're eligible for this year but weren't last year? So let me know. I want to kind of hear from you guys. I'm not going to do that again because I know that now it makes fireworks. Okay, what are some examples of tax credits? Okay, yes, we're going to go into that right on the next slide. I just kind of wanted to hear from you guys and what determines refundable and non-refundable. Okay, got it. Yeah, we're going to go into that right in the next slide. Rent for my office space. Yep. Home office. Yeah, that's a deduction. Yep. That's on the next slide. Cell phone, car mileage. Vehicle expense. Okay. Good. You guys know your stuff. Okay. All right. Type of deductions and credits. This is for you guys that asked everyone for you to know. Okay. So type of deductions. Again, deductions are the ones that are applied right before calculating your taxes. So we have the business mileage expense, we have a home office, and we have contributions to a tax advantage. Now, again, this is not an all exhausting list. These are just the ones that I see that are most commonly missed. And I want to ask you guys, does anyone know why? Why are they the one that are the most commonly missed? Let me know in the comments why that would be the case. Okay. I see. Okay. I see some comments coming through. Okay. So most of the times these are missed because they are not as simple as just classifying a transaction on QuickBooks. We forget. Yep, somebody said that. We forget to track mileage. Exactly. We forget to track mileage. We forget to track our home office deductions. You know, these are not, they could be confusing. Yep, there you go. They could be confusing. And they're not as easy as just like swipe my card, that's an expense, classify, here you go, right? These are things that require a little bit more effort from us. So for sure, you know, even the contributions to the tax advantage retirement accounts, one's got to be set up, you know, and you have to, you know, contribute to it all year round, and you got to download the form and all these things. So a lot of times these are missed. They're either not even started at first, or they're just overall not taken advantage of. And then the other ones are tax credits. So these are a few as well. Retirement plan for startup credit and child and dependent care tax credit. So I mentioned that one previously. The retirement plan startup credit. So this is like if you actually set a retirement account up, then you have a credit for that. Not many people know of that. And so a lot of times it is missed. And child and dependent care tax credit. If you have a child and you put them in daycare and things like that, again, not many people know that is a tax credit that you can claim. So that is another one that is missed. Again, not an overall exhausting list, but just a few. Okay, I've covered a lot. So I want to give you guys a little recap and just let me know in the comments that you're still with me and you're good to go. Okay, so we covered tax deadlines, you know, dates. We covered important documents. We covered HoneyBook's Tax Hub and how it facilitates your HoneyBook tax-related financials. And we covered tax deductions and tax credits. So are we feeling a little bit more informed now? I know at the beginning I saw a lot of like, they're confusing, it's overwhelming, like the overall sense of tax. Yeah, I get it. But are we feeling a little bit more informed? I love to see these responses. So let me know in the comments if that's something that you're just like, yes, so much better. Like the weight is off my shoulders. Okay, I'm seeing some hearts. So that's good. That's good. All right. So this is the very last thing we're going to cover. And this is now you know everything about tax prep for tax season. But we don't want to leave you guys with just that. We want to give you some quick tips, literally a few minutes of just preparing for next year. Because we are already in that year and you want to be able to prepare now so that next tax season it's a lot better than this one. So we're going to run through these real quick. So the very first one is estimated tax payments. If you didn't make estimated tax payments last year, I highly recommend that you make them this year. And the very first deadline for that is April 15 for Q1 of 2025. Overall, you are generally, expected the IRSs have to pay estimated tax payments throughout the year if you expect to owe more than $1,000 in taxes. So this applies to individuals, sole proprietors, partners, S corps, all of the above. So that's something that, again, I highly recommend for you to do. Here's the reasons why. When you do this, you avoid paying penalties related to underpayment. You avoid an unexpected tax bill because you did not pay them throughout the entire year. And you help minimize your tax liability. So a good rule of thumb is for you to set aside 25 to 30% of your taxable income in a savings account so that then when they come around, you're able to just withdraw the money and go ahead and pay them. You want to pay the federal taxes over on the IRS website. And then if there's state tax, you want to do that with your state website. Just make sure it's like an official government website because you're giving information and you're giving, your money, most importantly, but also your information like socials and EINs and things like that. So definitely make sure that you're doing it on a official government or state website. So the very next thing is for you to keep, if you don't already do this, keep your business and your personal separate. If you have them mixed up right now, you may be eligible for HoneyBook Balance, and that's a account through HoneyBook. So you can also streamline that there. So now you also have your expenses as well. So you'll be able to do that. But separating your accounts is a really great way to not miss tax deductions and not run into making errors because everything is mixed into your personal and your business. You also cut down the amount of time and effort spent by you and your tax professional. Please. Okay, that was a little exaggerating, but that goes back to those late nights that I was talking about, right? That you're trying to scramble everything, and also your tax accountant is like, where are the documents? And then you have to file a tax deadline. A tax extension and all these things. It just makes things so much harder. So just cut down on the amount of time and effort. It simplifies your bookkeeping and accounting. It also lowers the risk of piercing the corporate veil and raising red flags if you're ever audited. And it also keeps more accurate understanding of your financial health all the time. So it allows you to manage your cash flow more effectively and also make it easier for you to know whether your business is profitable or facing challenges all year round, not just at tax time. Okay. So the next one, you want to make sure that you consult your CPA or tax professional about, tax saving strategies. So this one is for sure the S Corp. I know we said we're going to talk about it a little bit more, and we will. So to become an S Corp now for 2025, you have a deadline of March 15. And so if you want to do that, then go ahead and talk to your tax professional about that. There are benefits to becoming an S Corp, especially tax benefits, but you want to make sure that the tax benefits outweighs the cons, like the expenses and all the things that you have to do to become an S Corp. You want to make sure that it's right for you. If you don't contribute to a retirement account and that's something you want to do, that's something that you also want to talk to them about. So that way you are more informed and also can take advantage of a tax deduction there. And last, again, quarterly estimated tax payments, because they will help you tremendously to not have a huge tax bill come tax time. So, okay. I hope everybody's with me. I know I went over a little bit of time, but it's just so much. And I wanted to do my best to really cover it with you guys. So now you know all of these things. I am going to head on over to Q&A. So hit me. Let me know what's going on with you.
Hi, everyone. Okay, thank you so much, Haley. That was incredible information. We pulled a bunch of questions for you, and I know we're going a little over time. So before we do that, I just want to level set with everyone. I'm going to link in our comments our Talk Money channel, which is where we can continue this conversation. Outside of this webinar, Haley's there answering questions all the time. So any of the questions that we aren't able to get to, because I know we're going to go over a little bit, I'll pull those into the Talk Money channel, and Haley will answer those there for you so that everyone's answers are asked. Let me just put that into the channel right now for you. Awesome. So Haley, first question for you from our members here. How can a member prepare themselves for any differences in filing taxes if they've added physical products as a revenue stream? Does the type of revenue matter when filing your taxes?
No, I think that what really matters is how you're structured. If you're an LLC, an S corp, or a sole proprietor as well, LLC and S corp, they file the same way. It's just the S corp that files different. So it's just going to be more income probably that you're going to have to report. I think my biggest thing with that is not so much a tax thing as it is a bookkeeping thing, is making sure that in your books, maybe you are separating so that you know what came from services and what came from products. And then my other thing would be just figuring out with your tax professional about sales tax, because with products we may have sales tax involved there as opposed to services. Most of the times generally they are not taxable. So that would just be my one thing with that.
Got it. Awesome. Thank you. And then we had a bunch of questions in the chat about what qualifies as a dependent.
Okay, so the IRS has a really long and extensive definition, I would say. And it also depends on what type of credit you're claiming. So I think that what I would do with that one is, if you want to drop this question in the community, we can drop the for this credit, it would be up to 17 years old. For this credit, it would be up to 13 years old. For this credit, it would be anyone that you take care of it this way, that way, whatever. Because it really depends on what you're claiming. Not everything is a dependent all around.
So it's not just a flat dependent.
Yeah, I think that overall, I want to say is 18 or 21. If you're doing claiming dependents with you, but then if it's specific credits, then it goes into a specific age.
Got it.
Or a specific description of how that would be classified.
Got it.
I think we could drop that one, and then I could have more detail and then be able to link those up.
Awesome. So for more detailed responses, head to that Talk Money channel that I linked in the chat, and Haley will be there to give some more deeper answers.
Yeah.
And so now a question for clarification on the 1099, discounts are not included in the 1099. We need to manually deduct them to get the gross income. Is that correct?
So refunds are not included, and charges, fees are not included. For discounts, I have seen it both ways. I don't know why, but I have seen it both ways. Sometimes they are included and sometimes they are not. I think that it may depend on the type of business and the type of not company, but not portal, payment processor that it's issuing it, how it constitutes a discount. So sometimes it will constitute it as part of the gross and sometimes it won't. So I've seen it both ways, and I know it can be confusing to add to everything else. But I would just verify. One of the things that I do, and the HoneyBook report will really help you with this, is if you see an amount on your K90 on your 1099K and you're like, you issued a whole bunch of discounts or whatever, go to your payments process detail and see if that is accounting for discounts there as well. And then that way you'll be able to say, oh, okay, it's accounting for discounts this way or not.
Got it. Awesome. Thank you. And then we'll just do a couple more minutes of questions before we close out for the day. What are there benefits or disadvantages to filing an extension?
So I would say that there's more benefits than they are disadvantages. The reason why is because sometimes it's better to file an extension if you know that you're not prepared and you may miss deductions and you don't have everything together. It's better to file an extension and file right than to do things, out of nowhere and just know that you're not doing them fully correctly, whether that means you're missing income that you're not, reporting, or there's deductions or credits that you didn't get, paperwork for and you could have, claimed. I would prefer to file an extension and then get everything together and then file correctly from the get-go.
Got it. So no penalization for filing an extension.
No. You can file an extension and then file on that extension date or before, and then you'll be fine. Payments, I think interest and penalties is like a thing when you go past the deadline and you haven't filed an extension and now you're just like filing like May or June and you never filed an extension. And so it's like, all right, why did you not take advantage?
Awesome. And then I guess another question, what determines refundable versus non-refundable?
So that is the IRS. And we can link to that as well. But right on there, some are refundable and some are not. It's just the way that they made the credits. And you can, if you look up a credit specifically, right, like the child tax credit or the child and dependent education tax credit or whatever the ones that we talked about today, you're able to see, okay, this is a non-refundable tax credit, or this is partially refundable or partially non-refundable. So there are so many that my best answer is looking at like the specific one and then figuring out, does the IRS say that this is refundable or not refundable, partially or not, at all, whatever the case may be, because that way there's so many that it's impossible to really answer. And we don't make those rules as accountants. So they just come from the tax code.
So there's no like overarching logic. It's truly just whatever they say.
Some are and some are not. Exactly.
Okay.
And it's just important to know that some are and some are not, and how they affect your tax return, so that you're not like, oh, that's $1,000 and I owed $500. I'm going to get a refund. No, you're not, because it's not non-refundable. So it's just important to know the difference between the two and whether one is or not.
Got it. All right. One other question. Let's see. Are there tax benefits of setting up an S Corp parent company on top of operating under the LLC that reports to the parent S Corp?
I believe the benefits are the same, but I would really check with your tax accountant. That is a little bit of a complex answer to fully spit out, because I don't know all the specifics to the business or the personal tax returns or anything like that. So I would say check with your tax accountant, CPA, tax preparer, and have all the cards on the table and say, how does this benefit me or not? Is there any benefits? Is it, are there any drawbacks? Is there any cons to this? Because there are so many other things involved that I would feel inadequate to just say yes, no, and just not have all the cards right in front of me, essentially.
Totally.
Sorry if that wasn't very helpful, but
it makes sense.
Yeah.
And what about tax credits? So you say, let's say we have a couple and they have a child, and they've both paid into child care, but they're filing separately. Do they both get to claim a tax credit?
I'm going to check on this, but I almost believe that when you are filing separately, you cannot claim it. So maybe one of them can and not the two. Okay. So that would be the thing. Most of it is when you're filing jointly, married filing jointly, or just, single because you're not married. But when you are filing separately, things become a little bit more complex. And I believe that only one can claim, not the two.
Got it. Sounds good. Mm-hmm. Let's see what else. If we accidentally use a personal account for business transactions, how do we reconcile that?
Okay, so follow-up question, because this could mean something completely different to the person asking than it means to me as an accountant. What do you mean by reconcile? Do you mean like how do we like record that on our taxes, or do you mean yes?
Yes, I believe that's
what they
I
meant.
believe that's what they
Okay.
meant.
So if you're using a personal account for business, number one, we may want to stop doing that and just use a business account. Unless you are using that fully for business, then maybe. But even then, please stick to business accounts for business purposes, just so you're, no worries, all covered,
Totally.
and can just go to sleep with peace. And so if that's the case, you can still claim all of those like business deductions, because they are business deductions that were used for the business. So you'll still be able to do that. When we use a bookkeeping software, those are usually entered in via journal entry, so that they still make it to like a profit and loss, and you still have them recorded within your 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 P&L for your business. But if you're not, then you could still take those and say, hey, I also had this much for this expense, this much for this expense, whether it came from a personal bank account or not. But you definitely want to kind of mitigate that moving forward, so that it doesn't become red flags, like I was saying, and piercing the corporate veil and audits and things like that, that hey, this was a personal account, was it really a business expense, and more investigation into that.
Totally. Makes sense. Cool. And let's see, we're just about at time here. So let's do one more question. It seemed in the chat, there were some questions around like, am I the one sending a 1099 or am I the one receiving it? Can we just go over that really quickly? Because I know, some of our members here might be receiving money, but also sending money.
Yeah. So it could be both. You will receive one if you for instance, you'll receive one from HoneyBook for all the payments that you transacted if you made more than $5,000, right? And then let's say that you paid someone not through a payment processor like HoneyBook, Stripe, PayPal, not friends and family, business PayPal. Very important. Then they will issue them a 1099, not you. You are only responsible for issuing a 1099 NEC to contractors that you paid $600 or more via cash, check, ACH, wire, any of these things that were not tracked through a payment processor like a credit card. So if you pay them through a credit card, then the credit card company, the Stripe, the payment processor, whatever, will take care of it. Especially like if you work with a photographer and you pay them through HoneyBook, then that will be HoneyBook's responsibility, Stripe's responsibility, PayPal's responsibility, because you pay them through credit card. Do not issue them a 1099, because that could result in overstating their income and then having to pay more taxes, because now they're saying they collected this much from HoneyBook and then they also collected this much from you, and that's already included in that report. So that would be, let me know if that clarifies, but essentially you'll get one and then you issue one if you have those, if those things are met.
Awesome. Thank you so much. All right. Well, that was great. That's about all the time we have questions right now. But again, I'm going to link in the chat our Talk Money channel. We're going to be hanging out in there. Haley's in there answering questions. So anything that still don't have clarity on, please head over there and we'll be able to help you out. Thank you so much for being here. I hope this was helpful. I know taxes are a big, scary thing. And I hope this takes a little bit of the weight off of it. And just know that we've got you. Head over to Talk Money. We're there to help. We want to make tax season as painless as possible, which is a big ask, I know, but we're doing our best. So
doing our best.
Yes. Thank you, everyone, for being here.
Thank you.
I'll see you next time. Thanks so much, Haley.
Thank you so much.